Welcome back to the portfolio, everyone. And today we're going over the top 5 Dividend Kings that you can pick up right now. Dividend Kings are companies that have consistently increased their dividend each year for over 50 years. So these companies have weathered every recession, depression, and economic boom over the past 50 years, and each and every year they have increased that dividend payment to consumers and investors and have not missed a single payment for at least 50 years. So we're going to go over 5 different Dividend Kings you can take a look at right now, and I'm going to go over a comparison that compares how Dividend Kings have performed compared to the overall market. So before we do that, we're going to take a quick look at my portfolio. Overall, we saw a nice day today, a little bit in the green, up close to 1% on the day, or up around $313. Overall portfolio value is now at $43,756 and down over 10% overall in the portfolio. So the first we're going to take a look at here is how the Dividend Kings performed over the past 20 years compared to the S&P 500. So this portfolio right here compares a portfolio of 29 Dividend Kings compared to how the S&P performed, starting with an initial $3,000 investment in 1999, and it compared the performance with dividends reinvested over the last 20 years. And as you see here, portfolio 1, the blue line of the 29 Dividend Kings, grossly outperformed the overall S&P 500 over the past 20 years with reinvested dividends. So the initial portfolio value at $3,000, you can see here it's very close to zero, grew to an ending portfolio value for the Dividend Kings at $302,271. Absolute insane growth from those dividends that are reinvested from the Dividend Kings compared to the S&P, who ended up over the same timeline with a portfolio value at $224,000. So of course that's not a bad return either way from both options, but you can see here the Dividend Kings have grossly outperformed the S&P over the past 20 years. Before we move into the top 5 picks, I am going to ask, can you please like and subscribe? I am the Gen Z investor, and every single day we come out with videos that talk about different stocks you can buy and how the economy has been performing, as well as the overall stock market. So these 5 Dividend Kings we're going to go over today that have 50 plus years of dividend growth, these are the names that you know. These are the solid blue chip companies that people are very aware of. Because of their dividend history, they are talked about a lot, and these are usually some of the massive and biggest S&P 500 companies out there. So the first company we're going to talk about today is, of course, Procter Gamble, ticker symbol PG, currently trading at just over $117 a share. 5-year, you can see nice 46 gain in share price over the past 5 years, and it has fully recovered from the pandemic drop and has reached close to new highs from pre-pandemic levels. Current market cap at $288 billion. This is an absolute massive company. Next thing we're going to take a look at, of course, is the dividend tab, because that's especially important today. We're talking about Dividend Kings, and that dividend growth streak is extremely important, especially when we take a look at things like their starting yield. So if you purchase Procter Gamble today, your starting yield is going to be around 2.7%. They annually pay out $3.16 per share. Very nice, very sustainable payout ratio, just over 63%. I like to maintain my payout ratios for my dividend growth companies below 75%. That just allows the company to make sure they continue to grow in the future and they have enough money left over to continue to operate their business and actually grow that business over the long term. Their 5-year dividend growth rate is very low, but that is somewhat to be expected with these companies. These are the blue chip cash cow companies. They're not the high tech growth stocks. None of these companies here are growing revenue at huge paces year over year. A lot of these companies, if they can grow revenue at 3 to 5% a year, they'll be happy, as well as income growing at that rate. This dividend has continually grown, and if you purchase this stock, the dividend will hopefully continue to come for years in the future. And getting that nice 3% dividend yearly growth just shows that your money is growing to either match or slightly beat inflation, so you're not losing money each year to inflation. Your dividends are actually growing at that rate or slightly a bit faster. And of course, like all these stocks on this list, they have very nice, very long dividend growth streaks. Procter & Gamble's dividend growth streak is at around 63 years to date. The next one we're going to take a look at is how safe this dividend is. They've been paying out a dividend for 63 years. How safe is it going to be moving forward? So you can see here, very slow dividend growth rate. As you can see, the 5-year average was at just over 3%. Decently low beta at 0.75. Market cap close to $300 billion. But the very important metric we're going to take a look at right here is The dividend is actually ranked 99, is considered very safe, and 99 is the highest rating you can get from Simply Safe Dividends. That just means that it's very, very unlikely that dividend will be cut anytime soon. The company has enough income to continually pay out that dividend, and the dividend is considered very safe and secure moving forward. Of course, this is not certain. For any reason, the company could decide to stop paying that dividend. They have full control to do that. But with a company like Procter Gamble and the rest of these Dividend Kings who have such long dividend growth histories, in my personal opinion, it's very unlikely that anytime soon they will be cutting that dividend unless they really need to. But of course, with a dividend safety score of 99, you can feel kind of safe knowing that that is probably not going to happen. The second stock on our list is going to be Johnson & Johnson, another household name that is talked about all the time across all different stock channels. You can see here a 5-year share price appreciation at just over 40%, another insanely large company at a market cap of $370 billion, starting yield today at just around 2.9%. So with this starting yield at 2.9%, you're going to get an annual payout per share of $4.04, with a beautiful, very safe, very sustainable 52% payout ratio and very nice dividend growth. 6% average dividend growth rate over the past 5 years is beautiful to see. When you purchase this stock, you lock in that close to 3% yield. With a nice 6% on average dividend growth, your consistently dividend income is going to come in, and it's growing at a faster rate of inflation each year, and you're going to see that nice income compound and grow very nicely in your portfolio. Dividend growth streak around 57 years, which is of course absolutely very impressive and massive, and we love to see this from these Dividend Kings. Their dividend safety score once again is at a 99, means it is extremely safe, very, very low chance this dividend gets cut anytime soon, which reassures a lot of investors knowing that that consistent dividend income is going to continue to come in for years to come. Third stock on this list is of course the very famous and very much talked about CocaCola, ticker symbol KO, trading just below $45 a share. Coca-Cola has been a little bit of slow growth recently. They've seen not the best growth in revenue and net income recently, but you can see here on the 5-year growth chart, share price is up just only 11% over the past 5 years, but you can see here it has not even close to recovered to pre-pandemic levels. So if you're looking to pick up one of these Dividend Kings, Coke may be that for you because it has not returned, and hopefully it does go back to those pre-pandemic highs at around just over close to $60 a share. You can see here. We're going to jump over to their dividend tab. 3.67% dividend yield currently, annual payout at $1.64 a share. Coca-Cola does have an extremely high payout ratio at around 88%. That is somewhat alarming, that is somewhat scary, but I do believe Coca-Cola can recover moving forward because they are diversifying into a bunch of different brands. They are buying out a lot of companies that are going to expand their income streams and kind of bring them into new markets, that hopefully they can get those earnings up, bring that payout ratio down to a more sustainable level, and they'll continue to pay that dividend moving forward. 5-year dividend growth rate at just over 5.5%. Very nice to see. Similar to Johnson & Johnson, your dividend is growing at a faster rate than inflation, so you're getting more income each and every year. A dividend growth streak around 57 years right now. Once again, extremely impressive. Love to see these long dividend streaks. Take a look at their dividend safety score. So they have a lower rating compared to the first two picks, Johnson & Johnson and PG. Their dividend is considered safe still with a score of 80, but as you can see, they're not very safe. We saw that payout ratio is getting higher. Their revenue and their income growth is not growing at a faster rate compared to the other companies. So you can see here that dividend is still considered safe right now. There's probably not going to get cut in the short term, but if Coca-Cola doesn't improve operations, it may be at risk in the future years coming forward. But of course, do I personally think Coke's going to cut that dividend anytime soon? Absolutely not. With that 57-year dividend streak, they're going to do everything they can to maintain and increase that dividend every single year. Fourth stock on this list is Lowe's. So I actually talked about Lowe's. I made a full video dedicated onto a full analysis of Lowe's. You can see here on the 1-year chart, their share price has grown 33%. Current yield at 1.67%, and a market cap of just around $100 billion. So once again, a large company, but not those mega cap companies like Johnson & Johnson, who had a $370 billion market cap. Dividend tab, lower starting yield at 1.67%, annual payout of $2.20 per share, but the lowest and very, very, very sustainable payout ratio at just over 33%. So for every $1 in earnings the company brings in, they actually save 66% and have that back into the business to reinvest and grow the operations, and only a third of that every dollar earned gets paid out as a dividend. So a lot of money staying within the business. And of course, you can see here with a lower starting yield, low payout ratio, they do actually have a much higher 5-year dividend growth rate. They're growing their dividend on average each year for the past 5 years at a rate of 20%. Another insanely nice dividend growth streak at around 56 years. So very long. They've weathered a lot of storms and they've continued to grow that dividend each and every year. Their dividend is considered very safe at a score of 97, which of course, very reassuring knowing that if you throw your money into these companies that your dividend is going to continue to come in each and every year for at least a short term without any worry of that dividend getting cut at the current market conditions. The fifth and final stock we're going to talk about today is once again another very nice dividend king, ticker symbol HRL, Hormel Foods Corporation, trading at $48.67 a share. 5-year chart shows a nice 64% price appreciation. Take a look at their dividend tab here. You can see decent starting yield, just shy of 2%, annual payout at 93 cents per share. Very nice, very sustainable, 56% payout ratio. Beautiful 5-year dividend growth rate of 16% with a 53-year dividend growth history. Once again, been able to weather every depression, every recession we've had in the last 50 years, and continue to increase those dividends during tough times. Finally, for this last stock, we're going to take a look at the dividend safety score. And you can see a very safe dividend score rated at 99. Very unlikely this dividend gets cut anytime soon. And you can see here, this is actually one of the smallest companies of the Dividend Kings at a market cap at around $25 billion compared to the other massive companies that we've already talked about today. So that's how we're going to wrap up this video. I'm going to say thank you for tuning in. Those were 5 Dividend Kings you can take a look at right now if you want some safe, consistent dividend income into your portfolio. And as dividend growth investors, that's something we strive for into a solid portfolio of diversified stocks. So I appreciate you for tuning in. Thank you, and I will see you in the next one.